So just going over some areas here on the charts. So it's pretty important to check out supply and the supply and demand zones. Just something I kind of wanted to let people know about. I mean, a lot of people don't understand how to trade, and it's very unfortunate. They think that support and resistance is the only thing that you need to be doing, and it's not. You got to understand supply and demand. You want to buy at wholesale and you want to sell at retail. That's what it comes down to. I'm going to make a video on this, but I will go over a few things. So let's go over the charts here. Before tomorrow, you need to learn what's going to work and what's not going to work. So looking at Apple here, looking on different time frames. So if I break this down, I got all kinds of drawings, but look at this. We had an uptrend here back in November, almost mid-November here. Nice little run. Came up. And then if you want to find out where the supply and demand zones are at, it's pretty simple, really. So this is the top, correct? So you have this top right here. And then it just breaks down, trades sideways. So this is called, basically it's gonna break down, base, and then break down again. So the way that you draw these lines and draw these support and resistance zones, so to speak, what they come in is supply. The supply is too much supply, not enough demand. Everybody sells off. So if I just, I'll take the color out of this real quick. Let's do something like a light gray or a white or something. So you can see the candles in here. This thing hit an all-time high. Big fat candle down, right? And this is all supposed to be like kind of a support area here. And once it starts to base, so it pulls back, bases, and then another big sell-off, big candle down. And what you could do to find out more about that is you just got to check all the time frames. So you have the 4-hour chart, and then you go down to a, I guess we could do, that's a 4-hour on a 10-day. That ain't gonna work. I'll go with do a 20-day 1-hour chart. So coming back up here, this is a 1-hour chart. So as you can see, I'll zoom in here. All-time high, comes down, sells off, bases sideways, and then eventually gets the big red candle, and you want to have no more than 5. And then, so that is going to be your new supply zone, not demand. Nobody's demanding to buy right here. So you got to understand these supply and demand zones, because this is where the big money comes in or gets out. Because there's no retail trader that's going to be moving these markets. The market cap's way too high. So you got the banks and everybody's selling out. Look at these candles. And look at the volume down below. And then if you have one of my indicators that I share in one of my videos for Thinkorswim, you could see that there's these are red candles is what they're showing overall, but in there's very little buying. The green is the buyers, and that's probably just some shorts covering that are retailers. And then everybody else is selling. But look at that. Huge volume just stacking right into the close, because the gray zone here is aftermarket. hours. So what I'm getting at is this. You basically, you got to find something called a fresh zone. And the fresh zone is going to be something that hasn't been around yet. So you always look left, and you want to look left and up if you're trying to look at the, if you want to go down, and then, or looking for something to go down. And then, or you look left and down to get another one. So let's say right now it's kind of hard because there's not really much you could say as for the downside or for the upside really anymore, because it's already been there. But in this area here, you could see that it come. So if you gotta look at a breakout spot, so what would you say? These are kind of bad examples in here. Let me find out something back here. You got to just keep on looking left until you find something that hasn't been hit before. So right here, okay, this area, this whole zone right here, sideways. This was the rally right here, back here. So it hit like the 180. That's what this big purple line is, and then the 200 is the red line. And I have them. So it pulls back, bases down here, starts to rally up, and so you just go to the top of this right here, and this is going to be your supply, and then you go down to the wicks in the bottom. So this big green candle right here that goes up and then starts to keep going and buy all the way up, that's where you would draw your zone. So you're going to grab the top here all the way down to the bottom of this area here, and then what you do is you're gonna draw a line to like the bottom of that red candle there to the left of the box of the rectangle. Draw it all the way across. This is all gonna be supply right in here. So in theory, what you want to do is you want to wait for supply to gets bought up, comes back up, and then comes back down and touches. But this is Apple, so this is a very hard situation to show as an example. But this is a supply zone. So way down here in the 123 to 128 range, if that price ever comes back down and touches that, you're going to see buyers jump on that big time. And that's going to be retail traders as well. I mean, retail, and then also a lot of institutions. So what we have here on Apple, besides the fact that they came on with crushing earnings and just destroyed it, is that you got these supply levels, right? Or these are just basically, actually, this is just technical analysis, right? So you have support and resistance. The reason why Apple bounced so hard here is because if you look back in September 8th area, in that range, you start doing your levels, right? But support and resistance it's not going to be your sale. That's not what you're looking for. You're looking for actually supply zones and demand zones. So let me find something else. Let's just go with Roku or something. Look at Roku. Okay, so this thing's just been on a freaking downturn big time. And I had some, support lines and resistant lines in there. But let's take a look. So let's say we're looking for a supply zone, not a demand zone. Demand is when they want to buy it up, and supply is when they want to sell it off. And when I say they, I mean institutional buyers and sellers, banks, anybody with the money, hedge funds, etc. Okay, so you can look here. You can draw the charts. This is a daily 1 year chart. I can go 3 year. I can go on the weekly charts, anything. But if you look at the weekly, look at this. This is back when I was trading back then. Yeah, it was a while back. So I can remove all these lines, though. That's what I'll do. Remove drawing. That's probably not gonna do it. I'm gonna remove all of them. So clear the drawing set. Okay. So you look at this as a weekly chart. And we're right here. So that's about 6 months ago or so. Obviously, Roku went on a tear and ripped. But what you want to look at here is, so this thing came all the way up. Look at this right here. This right here is, so it basically rallied right out of this area here. Rallied, right? Then it based, then it rallied again and just kept going. So this right here, this area on the daily chart, this is going to be where you would draw your lines. But it's, or excuse me, the weekly chart. So if you want to do a pretty big, it's pretty significant zone. So just for, demonstration purposes, you would mark the bottom right here. Okay, so you're gonna mark that bottom wick. It's close enough, and then you're going to say, okay, when did this really rally? But it kind of rallied and then came and then sold off and then kept going up. But it doesn't matter. That's showing you that there's some demand there. That was just a pullback, and then they said they wanted to buy it. The market wanted to buy it. So you can grab this area right here on top of these wicks on these reds that got just destroyed and blown out of the water. So go ahead and mark those. You now can draw your rectangle from this area, kind of in that zone, because it's hard to predict when something's going to, hold a price point or whatnot. So now you can mark those areas. And once you do that, we now know that we have a demand zone here. That's this. Excuse me if I was saying supply, I meant demand. So this is demand, meaning you had a heck of a rally coming up. And look at this. This thing's uptrending. This is awesome. However, we knew that there was going to be a good area short if this area did not hold. If you were charting and you were doing technical analysis, look at this. You drew your lines in this area because you knew, because you looked left, and all this stuff's up here, and then this is just a crazy double top, like to the T textbook double top. You know what? Those don't always work, but when they do, it's great. But look at this. This is just insane. Goes up, comes down, bounces around in here, and then goes back up. You could probably get some supply and demand zones in here as well. I mean, I would probably have to break it down in the time frame, but you could probably find it. But as far as this down here goes, this is pretty significant because you had this sideways basing action here, rallies, goes up, sideways basing action again after showing you, okay, this is going to be a supply, or a demand zone. They take it, they buy it, it gets eaten up again. So right here, you could technically, it bases again, and if you look this way, there's nothing that's fighting. It's not fighting anything to the left. So you could say again, this is going to be another supply zone in here, because you had this couple days or weeks of consolidation sideways, and then you could draw another one right there, and then down to this wick here, all the way across, right there. So here's the problem with this. This goes up, yeah, you win. I mean, you're killing it, right? Because you would get long, or you wouldn't get long, sorry, you would watch this go up, come back down, and then if it hit your area here, then you would take your trade once it comes into this area. You don't want it to go too deep into your demand zone though. So it comes in, gets in demand, and then all of a sudden it starts bouncing up. And you're doing great. You're feeling good because you got a good trade going on. I mean, it's ripping too, by the way. then it rolls over, comes back down, your stop out's going to be at the bottom of this. Because then now you're seeing that the demand is not holding up and it falls through. Yes, it rallies back and comes back up, but that's not a chance I would be willing to take. So then it kind of starts chopping around. Look at how you're just getting chopped out. But this is also a weekly chart. So if we break this down, and we break this down into a 184-hour chart. Okay, coming back. No, I'd have to go more. Let me go a little more here. Let's do 360. Okay. So now it's looking a little different because it's on a different time frame. So now here's your demand, right? This whole area ended up being your zone. And taking a look a little closer, it came up, it came down, it chopped around, got good, started getting bought up, pushes, and there you go. That's going to be your little area that you mark. Okay. So now you watch it and you're waiting for it to tap and then go higher because you want your demand zone to be your entry point. But look how choppy this is. Came in, you got long somewhere in here, and then your out's going to be down here. It starts coming up and then rolling back over. At that point, it's like, oh, this really isn't looking that good. But also, what you have to look at before you start realizing is this. Your trend here up this way what did it just do? It snapped. You had an uptrend, it peaked, it came back down, and it broke trend. Right there, it broke trend. So knowing that it broke trend, that should be, I mean, it's obviously needs to break trend to kind of come back down to test. But when it comes back down and then gets bought back up and then hits this trend line again here, rejects off that line, and then starts to really put in this other trend down, that's not looking good. That's looking a little more bearish. And then plus you got to consider what's going on with news and things like that. Also, this is the 180 day. I put a 180 day line on my charts, the SMA, and the reason why I do that is because I want to know that things are getting weak. If it goes to the 200, then you understand it's really getting weak. There's the 200, but the 180, at least it's giving me a heads up that hey, it's getting kind of close to that 200 SMA, and that's not good. That's showing weakness in a stock or any kind of security. So, as I was saying, this thing came through and just chopped around. Look at this supply zone. It just chop. You're just getting chopped out, and it doesn't hold. The freshness of this does not hold up anymore. So what you got to do is you have to draw. So go back to this situation where we drew this supply zone, where it came in, it broke out, came back, and just continued on. That's great. We have to wait a long time before it comes back down to retest. But as we know, things are getting kind of a little weird in the market, and Roku wasn't doing well. So it comes back into this supply zone, right to the bottom, weird, bounces, so the buyer stepped in. And you could still make it work, but you got to understand that you got to have a very tight stop in here because below that is showing weakness, and it can crack and just continue down, which it eventually does. It come in, there's but look at this volume. I do want to kind of point this out. Okay. So it came down, it tested this area, whatever, right? Starts to like rally a little bit, just kind of like pushing up a little bit. Then this day, it looks like the open in this day, the first 4 hours of the market that day, look at that volume. That volume is, it says it's like over 10 million. So, I mean, it's ripping. Probably more. So it's just tons of volume came in because they knew that this was showing strength again. So then the institutional buyers came in and they bought. And it rips up. Well, then it's, they bought in at 215 and it starts getting kind of a little interesting after hours. Pops back up a little bit to 265. I mean, there's some very good money to be made in there. And then it rolls over, cracks, and it does your typical, down, pull back, down, pull back, flush down, consolidate sideways, flush down, breaks demand area, rallies again, comes back up to the top of demand, rejects, comes back down, and you have to understand these are 4 hours, so it's not like it's just doing this in a matter of minutes or anything. Comes back, chops around, trades sideways for days. Can barely even get out of the zone, right? Because institutions are like, nah, I don't want to get filled up here. I mean, especially after that rejection up here. Nah, I don't like it. Starts coming down. Big bearish. I mean, this thing sold off that day, the first 4 hours, and just big sell off down. Some cover going on here. Hits this little resistance line in here now. And then it just sells off. All the way down here. Down to the bottom. Here we go. That was one test, two tests of the bottom of the demand zone, three tests crack. And then it flushes, kind of pitters back up a little bit next few days. Crack again, continues on, down, cracking, and then now it's where we are now. And it's still way below this area that used to be a demand. This was all demand up here. Now demand is now supply, because nobody wants to buy it anymore. And that's a long-term chart. I mean, that's looking pretty far back to be able to see and find that zone. And so what you do is you could draw these out prior to any chart you want to look up. Trying to find out. Let's see here. Any stocks out there that anybody wants to look up? You guys got any stocks? Anything you want to look at? You guys want to look at the futures or? All right. So I'm going to go with let's see here. What's Neo doing? Neo's an interesting one. Choppy chart. Things just going down hard. All right. So let's take a look here at Neo. Long term here. We'll put our trend line in. So we do off that first point up there down to here. And the fact that it's below its 200 moving day average makes it look even more weak. That's terrible. So Neo's chops around up here, triple top, basically fails. Big sell off, amazing. Then it comes down here, kind of bases and rallies. So supply and demand zones. I'll say it right here. Okay, so it comes down below this area here, which everybody would call this support. You know, they just draw their line right here. I mean, to the T. I mean, look at that. People would draw their line right here. Or here even. So it came down, broke through, whatever. Went through the 180. Got right there. Dips down, taps, rallies, comes back, taps, rallies, comes back, breaks through, rallies, breaks through, rallies, breaks through, rallies, pulls back, gains support of that support line. And now with that being said, and watching that, you got to see, like, this has already been here. This has already been here. So now we just got to wait for a trend change. Okay. Comes back up in this area. Okay. It's just consolidating sideways. Up, back down. It's consolidating. I want to see a big candle. There we go. There's a big one. That's a nice big fat candle right there. So I'm going to call this area a little more supply. I'll just mark this right here at the bottom of that wick, and then the top of these candles where that thing breaks out above. You want to be at the bodies of these candles here. Okay, now I'm going to back out. Come up, down. Fires, comes back up here. This was that support. This is where roughly this would be, yeah, this would be your zone. Big candle. Here we go, right up here. So this would have been your supply zone here. So then you're going to draw your rectangle all the way across. Just to show you. Okay, so this thing kind of chopped around, went up pretty good here, came back down, consolidated sideways, and then ripped back up, and then came back down. This almost right here would have been very close to that supply zone again, because it's just showing strength. That would have been a spot to buy right there. Because it's hard to have it pull back into your demand zone, because sometimes it just won't, and it's tough on that rip and then that kind of pull back and then into this area. Then you kind of get long again, and then it goes back up. But it's real choppy. I mean, it's tough because it goes up. You can buy it, and then it kind of sells off. Then it jumps, and So I mean, and then it's trending up, but it's kind of starting to turn over a little. It looks kind of weak. But you just watch it, and then sure enough, look at this demand right up here, big rip. But you would want all this above this here technically, because you'd want it to kind of to rally, trade sideways, and then rally, and then that's going to be your good old little demand zone. So a better spot in this case. It's just tough because if you look left, you have all this over here. That's all in the way. So just stuff to keep in mind. That's all this is in the way here. Because it could be resistance on just support and resistance in general. But going back to it for just demonstration purposes, you got a trend that's kind of going up here, right? We could all agree to that. Trend line, it's going up. And as it comes up, touches up, comes back down. This is kind of like, here's a lower high, questionable. Then it kind of rallies off whatever reason. But this little area here can be considered your supply zone if you were just looking at this as a chart in general. Now, it came up, trade sideways, so now you're going to go from these top candles here. That's going to be your top. Your bottom's going to be the wick down there, this green candle here, this wick here. That's all going to be your demand zone. You draw that across. So then you wait for this thing to rip, because as it ripped, you drew your demand zone. Rips up, comes right back down. That's a big old bearish candle. Now, what you have to do is figure out like, oh wow, that's the top up here at 55. This is crazy. What the hell? What made it do that? And so you'd have to go to a smaller time frame, say like 1 hour. Here, I'll just mark this so I don't lose it. So let's go to, like, instead of the 4 hours, let's go to the 1 hour. Probably not going to be 20 days though, so let's see here. All right. Scroll back. And I get it, like hindsight's 2020, but at the same time, this is all chart, just charting, and you'll know your risk versus reward. Okay, so let's get a little bit more in depth here. All right, as we see, we got kind of topped out up here at 55 and some change. Big candle down. So it kind of went sideways for a little bit, kind of pushed higher, everybody's all excited. It's going to keep going. Then big sell off. Big candle. 1, 2, 3, 4. Wow. Okay. So there's your drop, right? Base is sideways, little pop, and then a drop again. So this is where we mark our box. The lines, technically, if you want to do it correctly, you just do your line. So you mark the top here, and then you mark, and this is going to be your, and then you mark the top or the bottom here where this cracked, right? So this whole area is kind of just chopping sideways in this area, but that's okay. So then it's going to come right back down into this that which was demand zone, and then this is going to be right on top, and this is going to be now the supply. So there's a lot of supply. Okay. So then you're going to draw where this sideways action got snapped and broke is right down here. And you don't on the bottom, you only do the bottom of the candles. You don't have to worry about like the wicks on the bottom. The wick on the top, but not wick on the bottom. Now if you're going with this, and this is going to be with the supply. If it's demand, then it's opposite. Demand is going to be on the bottom wick, the top of the bodies of the candles. Okay, now we know that we have these areas marked. We're going to draw a rectangle there and all the way out into the future. You could edit the properties, grab some colors, and you can put like a custom. Let's just do something kind of pinkish or so, or maybe a little more red, but you don't want to, you just want to know that this area is kind of a negative zone. You don't want to buy in this area, right? Because you don't want to buy at the top and get screwed. Buying at the top, no good. You obviously want to short up in this area. And here's the cool thing. You can, okay, so you got this area kind of drawn out on a chart. You can back out. You can look left. I mean, looking at the chart, it's kind of in your favor, right? We had this trend line. Heck, let's go all the way back here then. Draw another one. It's at the bottom here. Got our trend going all the way up. Okay. Oh. So here you go. There's your trend. Okay, we got a trend right there. We can take this one out. Okay, so the trend is your friend until the end. Down here, you got a double bottom. Boom, boom, it bounced, whatever. This is on the 1 hour. Gets away from us, keeps going up, great. Comes up, big nasty wick. Or not wick, but just nasty top here. And then just big sell-off day. I mean, I'm talking, let's see here. Roughly, so 55 down to a $5 drop in the stock, which is what, 10% roughly. So almost a 10% drop in one day. You know, like a just doesn't even really bounce much. Goes in pre-market, gets a little gets some people covering that were probably short. $2 pop up, but here's the thing. This is something that you're supposed to just let it drop below, come back up, retest, and then drop again. And here's the cool part. Because you had a little bit of a supply or a demand zone over here, and then you have your supply zone right above it, that's how longs get stuffed on this one. So what they're going to do is they're going to see that there's a demand zone here. This thing pops up, it sells off, kind of nasty, comes back up, comes down right to the bottom, but then they see this nice big green candle, and they go, I'm going to get in this thing. And then there's all this volume here, and everybody who's shorting it in this area got bent and had to get out. And so then they got squeezed out a little bit, and it shot right up into this big supply area. People were like, okay, great, we'll buy, whatever. And then it, after hours, does its thing, sells down a little bit. And then the market comes back in, like, hey, we're in a supply zone or a demand zone here. They buy it. Rah, yeah, let's buy it. Let's rally this thing. And so they all buy. Huge volume coming in. Look at this. So you got 20 million, volume just rip, right? So it comes in, they all buy it right up into what? The top of the supply. And then everybody's like, I'm done buying. I'm not going to buy that anymore. I'm done. There's no way I'm going to keep buying this. I'm going to take profits. I mean, I'm up, a few bucks on this thing. And the thing with Neo is that, yeah, I could have some pretty good range days, but you could buy a pretty decent amount of size. I mean, heck, you could buy 2,000 shares if you had a $25,000+ account and you got 4 times leverage. So you could buy $100,000 worth of stock and have 2,000 shares, make a couple, over $1,000 or whatever it might be. Up to you. To each their own, right? So this thing gets bought up, and this is in an hour, 2 hours of the market being open, and then that's it. That's it. Comes down, next candle opens, and here, let me lighten this up. Let's say with that. So then this thing rips, comes back down. Big, fat, nasty candle. Just took it, right? Then it comes right back into, what do we call this? Demand. So demand holds. Kind of just consolidates sideways. Chop, 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 whatever. Nobody wants to get in anymore. Okay, pre-market next day, kind of rallies up a little bit, nothing crazy, but it's also in the supply zone. This is not the area to buy. You do not buy in here. You're a sucker if you're buying in here. You're just a straight sucker. And I guess if you do, I can't. No, you can't. Just don't buy. Don't do it. Don't do it at all. Just completely know how to draw these lines and just don't be a fool and getting chopped up or absolutely annihilated in these areas. So now this zone here comes back down again, breaks this area because it's good areas to get short. I mean, even if you were like, hey, I'm going to get short at the bottom of this supply area, because this is demand down here and this is supply. It's very close in this area too, which is, it's not good, but it shows that there's just weakness. And then also, if you look at the volume in these areas, it's just the volumes, I don't know. Everything seems to sell, everything is like a pop, and then obviously the volume just drops off. So a majority of your moves are right at the beginning of the day, which is how it is normally. Okay. So now this thing comes up, over, cracks here. So let's just say you got in short right here, 50,000. I know it's key level. Everybody's like, oh, 50,000. That's going to hold. It could. I don't know. But let's just say you're like, I'm going to get in short right here, 50,000 at the bottom of this supply. Your risk is to the top. Not even $2 a share. It's like $1.67 a share. Okay? Whatever, something like that. $1.60 a share. And that's if you don't even want to give it a little room. If you wanted to give it another couple, like a dime, risk $1.80. Okay? That's fine. You can do that. So in this scenario, if you're risking $1.80, you get in short in this area. Heck, you could have, okay, so this thing could have came up here, came back down, broke it, right? Retest, came back in, and then you could have been like, dude, I'm getting short in here. All right, you get short wherever. You could have got short anywhere. But if you waited it out and then had just kind of wanted to watch it because you're like, oh, look at that big candle. It's going to break out of here. So you waited, whatever, and then you saw it pop up one more time. And then you're like, hey, wait a minute. This was a high. This came here. This came here. This is a lower high. This is a pre-market pivot in here. So you come out and say, okay, well, there's a pre-market pivot. Maybe I'll just get short when it opens. I don't know. So it opened, though, but I think it opened You would have to get in pre-market to get short, I believe. Um, well, it's the 1 hour chart, so it's somewhere in here. You could have got short as the market opened, but then it really sells off. Big old candle, and then here's the volume, the sell volume pressure in that one candle. Yeah, it shows it red here, but I have it so that it shows what's being bought in that candle in that hour, and then what's being sold in that hour. I love to see what's going on as far as that goes. All right. So risk versus reward. If you look at that, this thing, you risked $1.80, $1.60, whatever it was, and then it dropped all the way down from 50 until it really, I mean, gapped down, came down. I mean, you would have probably got out down here. You probably would have got out about right here once it popped back above that. So say 44.35, 44 whatever 50. That's not a bad reward. I mean, that's definitely a risk 1, win 2 on that one. So if you risk $500 on that trade, 500 shares, would have won $1,000. Not bad. And you know you're in, and you know you're out. You would have risked a little more than 500. But you know what I mean. Kind of whipping that out. So if you had 500 shares times $1.80, you would have risked $900. However, if you would have made from 50 down to 450, just for all you to see it, so $50, subtract, what was it, 44.50 roughly, so 550. Yeah, so you're risking, that's basically a little over a risk 1, win 2 times your 500 shares. You risked 900, but then you won $2,750. But you stuck to your plan, and then you got out on a big bounce at the open. That's fine, because those $0.50 moves in those areas are definitely psychological. And it was a rally after that. I mean, look at that. There's a big old rally. So you might have been like, okay, pre-market pivot, I'm going to get out, and the pivot's right here. But this is also in the 1 hour chart. But I'm just trying to give examples. Okay. So I just want to show you guys this because this is pretty important stuff. You're basically the step-by-step, idea here is to ID the demand zones, and then you want to look left and look down if you're trying to find supply and demand. So demand at this point, demand zones, and you want to find where did it last rally? So it's always like a last rally spot in these areas. So this thing coming back down, if you look here, it came back down and then traded sideways and then it rallied. Let's say you were over here and just looking at this area of the chart and you're like, I got to keep looking, and you just keep on. Okay, well, let's see, this came up here, pulled back, and then busted above it again, pulled back. Nope, it just basically confirmed that this is good. A higher low, this is a higher low, this is a higher low. Came back, this dipped below, but then rallied back up. But it kind of just rejected the fact that it got below this, but then reconfirmed this one down here. So you got to just keep on looking back until you're like, really, you can see something rally. And you can see a trend change, like we've always said before. And it's just the hard thing to do is find those. Let's see here. Let's look at something else. else got anything good to see here? Support. There's support and resistance, right? But support and resistance is one thing, but demand zones and supply zones are different. And that's just something you've definitely got to study. You got to know what those areas are. If you don't, you're going to get chopped up. You're going to get spit out. You're going to get stuck buying high and selling low. You don't need to do that. It's avoidable. Okay. What else we got here? This is my little chart here on Apple. I got this kind of so this area here this is supply. I have this area up here marked out as supply, and then this right here was going to be demand, but it failed. And there's been also a lot of things going on in the news and etc. So, just something to keep in mind. But over here, in this area, on this side, came down, pulled back, rallied, kind of consolidated sideways here on this day, and then rallied again. This right here's the demand zone. So if I look at this little demand zone here, I go, okay, top, well, not really there. It's gonna be more like at the top of the candles, not the wicks. The wicks are on the bottom. So right there, bottom on that one. Okay. So I can come all the way across here and draw that out. This was a demand zone. It rallied up. I was waiting for it to touch back down to get long, right? If you were to look at this, and never made it down. Be like, just missed it by a couple bucks, right? Yeah, roughly, or not even a couple bucks, like $1 or whatever it was. Missed it. He got bought up. Big old push back up, consolidated sideways, and that right there could have been another. But here's the thing: if you look left, it's getting pretty extended. I mean, you got this right over here. It's kind of pushing up higher. It's looking like it's wanting to hold, and then it just rips after. But this is like after hours, that's pulling all this. Next day opens up, just sells off, right down to a standard deviation line. Consolidates a little bit against that, and then falls down. But this area in here is going to be considered now a supply, not demand. So it starts up here. So you got this thing tops out, starts to roll over, kind of like just trading sideways, whatever. This, okay, let's see here. This is kind of the area it starts. So let's just mark it here. This whole area it starts, which, it's after hours, it's whatever, right? The reason why I consider this an area to watch is because this is where it all begins. So this is kind of consolidated sideways, pulls down, consolidates sideways again, and then pulls down again. And because it pulls down again, you could see that this is now, it's just got too much supply. Nobody wants to buy it. Doesn't look, it's not attractive anymore. So you draw those lines, top of the wick down to the bodies of the of where it really cracks on the bodies of the candles. And then boom, you get another. So it pulled, it's basically a drop, base out, and then another drop again, right? So the unfortunate part is we're trying to wait for this to get retested. So we're waiting. And you waiting for this big retest, right? Unfortunately, once again, it doesn't make it there. It was off by like $1 again. Or so. Maybe a little less. It's just like, you could have got short in there and been really pretty good. I mean, let's see here. If you came right in, if it touches into that supply zone, what you're going to do is you're going to get immediately short. I mean, if you really feel like, it might penetrate into the supply zone a little bit, it's looking pretty strong, it could be. It could. But you have a lot of institutions and things that are shorting, hedge funds, whatever it is. They're all getting in there and just kind of selling at the top. Plus, we had this trend line here that was our friend going up, so to speak. But if it goes up and then hits that trend line, and like anything on a macro scale, so let's go to a daily, it holds more weight. And I'm sorry, but if you run into this line on a daily chart and reject off of that trend line, and you're in a supply zone, and you have heavy sell pressure come in, and you got to look at the volume down here. There's a little, and over here even, it's just like volume's lower. They're not really buying. So let me move over. So right in here, so volume's not as high as it has been. It's just questionable. I mean, you don't want to be buying at the top. That's not fun. So if you move back in here, and then we go down to a 1 hour chart again. 20 day? I don't know if let's do again. 1 year. We'll do 90 days. I don't want to do too crazy. Do a 1 hour chart. All right. Cool. Okay, so so this thing trades sideways, whatever, cracks, comes back down, almost retests. Like almost retests. But if you want to, and you're watching something like that, and you can always just look left, right? And then you do want to draw those little like support and resistant lines. Okay, let's play that game. Oh, well, I should probably draw, this is the bottom, this is like a little bit of was a support line right there. This is the cool thing about technical analysis. It's insane how like to the T it pretty close, right? Okay, I'm gonna zoom in here again. All right. So over here, we drew in our little line. Okay, this is our little support line after we drew in this stuff and it cracked below and everything. But okay, so it cracks below, that's fine, whatever. But then you look over here, when this thing sells off, comes back down, so it pulls, consolidates sideways, pushes up, sideways, whips around, whatever. And now This comes right back over here to test this little support line. Damn there to the penny. I was hoping it would get past that, right? And then get up in here so that I can go short. Or you kind of were like, well, I'm going to give it a little room and start like piecing in and buying in with a smaller size and legging in, or limping in is what they call it. You limp in, and so you're already anticipating that you're going to buy a few shares in this area and this area, and as it keeps going up into the supply zone, you're going to keep on cost averaging your short more, and then eventually this right here in that area, that's going to be your stop out right here. Okay? And that's why it's very important to have rules. But this area here, this is your stop. It's that simple. You got to have a plan going in. Don't get all emotional. Don't take too big a size if you're worried about, losing and freaking out. There's no reason. I highly recommend having a plan going into a trade. And this is how you do it. I'm going to be live all week, I think. But I do have other obligations. But it blows my mind how people just don't understand some of this stuff, and they don't care. They just want to gamble and treat this market like a casino, and it's unreal. Okay. If you guys can leave some questions, comments, any kind of future videos you guys would like to see, you want to know the history of me or my trading experiences. I've been trading since roughly 2016. I got in trading penny stocks like everybody else in the world. That was not for me. Definitely not for me. The pain that you experience trading that stuff, it's just junk. But yeah, this with becoming a technical trader is something I highly recommend. That's basically what it comes down to. I'm gonna probably do a nice official good video on this, but looking at just what's going on with the Qs and the rally and the news that they had from Apple, I mean, you're going right into, once again, so you're going into a supply area. I mean, I'm not saying that the market can't push through it. I mean, don't get me wrong. I think it's insane sometimes. But just a little bit of news make it pop. But watch out, because there's news and there's something going on out in the east somewhere that might kind of jeopardize some of the market gains. Don't get trapped. I mean, look at this range. I mean, just play the range. Don't diddle with anything in the middle. Don't do it. Play the range. Okay, so yeah, this is one of the little demand zones that I got. So it drop, base, drop, and that right there, that's going to be a very, so it dropped, it based, and then it kind of dropped, but then it based again here. And so that's kind of like, let's see here, let me edit this. Let me cancel this. Drop, gap back up. So looking at this area, I would say this would be the area where you would be able to draw in right here, because it held, it just went sideways and then dropped. So your area that you would consider. Be here. All the way across. That right there is your this is going to be your supply, but here's the thing with this supply. I'll just do that. Maybe you can see it. So this is your supply, right? It dropped, it based, and then it just sold off again. So that's just, you want it to come back and retest it. This one right here was your entry short. I mean, that was it. However, this is something to keep in mind. I mean, this thing can multiple taps is something that you don't want. You just want it to come down out of your zone here, right? Crack it, comes out of your zone, comes back up, retest it, and then cracks and fails again, or whatever. If it retests it and it goes in there, and it's kind of battling with it again, that's where you get short. Get short in there. You want to usually get short right when it moves past this bottom line here. Once it gets in there, like if I saw this move here, it's on a 1 hour chart, but if I saw that thing right there, I would have got short. And here's the cool thing. If you get short here, let's just say, and then you have, look at this, you have this little trend line drawn, whatever. You get short right here at like 357, say, it came up to 357, and you're like, I'm going to get short at 357. You got short at 357, great. You look across, you're like, oh man, that's a little support right there, but I'm going to go with it because this is a supply zone. 357. Looks like you're going to be risking roughly $5. Roughly. I don't know, somewhere around there. Let's just say it's a $5 risk. That's kind of a lot. I mean, especially, that's a lot. However, is it really a lot for the Qs? As we know, the Qs can move. I mean, look at the daily ranges. Daily average range. I mean, look at this one over here. You're at 373.73. And it goes all the way down to... wow. Yeah, like 361. That's a $12 move. You know? That's a $12 move. That's insane. So $12 move, it's got some range, it's got some moves. So that means take small shares if you're not comfortable with going big. And there's no reason to go big if you're freaking out about the trade. You're going to be going in. This is a very good strategy to use. Supply and demand is where you're selling. Basically, you're selling at retail here, short. And then if you came back down here in these areas, which this is not, this is kind of like obviously it's demand, but it's nothing I'm not interested in that, to be honest. If that cracks and pulls again and puts in another leg, you're playing this game of just, it's a channel. This is all this is, a channel at this point. And this big old rally right here at the end of the day, that was all on Apple. It's earnings report, great news. And that's all that was for. Because other than that, it was looking weak. Real weak. I jumped in on this going up just because the momentum was just insane. I mean, I have this here, and I was looking at the candles. So I'll just go back to the 5 minute real quick. And I had, I was just jumping in, jumping out, It was just, I shouldn't have even been trading the way I was trading, but I was going with low size and things. I was trying out something with some small size to see if it would work. Not playing the demand and supply zones, just kind of getting in, getting out, and being antsy about it. Actually, let's see if I can pull up my trades. Let's see, show Haven't done this in a while. Equities, options, favorites. Show trades. There we go. I mean, it was just foolish. Oh. Thought that was going to show up. On the cues. Well, it should show my trades. Oh, apply. There we go. No? Oh, interesting. I thought it was going to show my trades. Anyhow, it's not doing it. But, yeah, I was... look at this. Just you get chopped up in here. Not knowing which way to go. You can say, oh, we'll just play... Do the not supply demand, but just do your support and resistance. There's a major difference between support and resistance. It's pretty incredible. Anyhow, I'm gonna go live tomorrow and just kind of hang out for a little bit. It won't be too long, but maybe for an hour or two, depending on what's going on. Hope to see you guys there. Please leave a comment or any kind of questions, future videos, things you want to see. I can go through and work with you guys on that if you'd like. Don't forget to like, subscribe, and check me out. Check out some of my videos. They're not the best, but I'm kind of getting used to this YouTube thing. Yeah. All right. Well, good luck to everybody, and